What's going on, YouTube fam? This is the Wealth Investing Network. We do this for the win. You're getting a sneak peek into my stock portfolio and a sneak peek into my research on stocks. Today, we are talking about Bloom Energy versus Plug Power, putting these two stocks head to head. And before we do, I have to ask you to please hit that like button. Comment, subscribe if you haven't already for that YouTube AI. I previously compared Bloom Energy to FuelCell Energy, also Plug Power to FuelCell Energy. I like these two companies better. This industry around the hydrogen economy is so hot right now. People are making money on any hydrogen stock. But for me, it's the analysis and my research on these stocks that's keeping me away from some of them. Maybe I'll check out Ballard Power in another video. But for now, let's jump into Robinhood. So as you can see, Bloom Energy launched on the stock market in 2018, but they've been around for more than 10 years. I'm long this stock. They had an incredible run up in 2020. And the spike you see here at the end comes really from some news from Plug Power. So let's take a look. Plug Power had an amazing 2020, and there was just some recent news that's sending them close to a stock price of $50. A South Korean company is investing about $1.5 billion, and so Plug Power plans to sell a 10% stake in itself to SK Group. Obviously, investors really like that. As you can see, I'm long both these stocks, but Plug Power, my average cost was $0. I've mentioned before that Robinhood gave me this stock for free. I love and use Robinhood and also Webull. If you do your research and you want to try these brokerages, use my links in the description and we can both get free stocks. But we're taking a look at Webull here because here you can see Plug Power's full stock chart. They've been around since the 90s. They launched on the stock market in 99, had a huge run up, had a huge crash, went through a reverse merger. Their stock was trading at literally pennies. But as you can see, things really turned around for them. Now, because I've talked about Bloom Energy and Plug Power before in different videos, if you haven't seen them, please pause this video, watch those videos, and come right back. Links are in the description. I want to present all new information today. I'm going for just charts and news articles that you haven't seen before on my channel. Okay, so Bloom Energy sells primarily backup or auxiliary power to large commercial buildings. Think about large customers like Google or customers with huge data servers where their power went out for minutes, it could cost them millions. Hydrogen fuel cells can be a very useful backup. And you can see from this chart with Bloom Energy, revenue has been increasing, gross profit has been increasing, but their net income is negative. Speaking of negative, always do your own research. But in my research, I came across Hindenburg's research report. If that name rings a bell for you, their report took down Nikola Motors. After their report, the CEO stepped back. They've released reports on Condi Technologies, Loop Industries, and you can see what has happened to some of those stock prices. Their report basically called Bloom Energy a terrible company with too much debt and is not even a green company. So let's take a second to talk about what it means to be green with hydrogen. So the potentially great thing about hydrogen is that you can have zero emissions. You can have renewable energies go through a process of electrolysis that produces green hydrogen that you can either store, you can power cars, buildings, ships. Really amazing concept here, but that's green hydrogen that we're talking about. The stocks we have today, Bloom Energy and Plug Power, are more in the blue hydrogen category. They take natural gas and grid energy, which produces CO2. It's called natural gas, but do your own research. There's a lot of emissions, and grid energy just depends on where you are. If you're in West Virginia, most likely your grid energy is coming from coal. And if you're in California, it might be a little better. These companies take natural gas and grid energy, potentially do some carbon capture, then electrolysis happens. And that's how you get the hydrogen. It's not that idyllic version of zero emissions. Nearly 95% of all hydrogen in the US is currently derived from natural gas, but the objective is to increasingly use renewable sources. But guess what? That's really expensive. It's going to require huge investment, government interest, because even though hydrogen fuel cells solve a big problem that solar and wind haven't quite overcome yet, which is the ability to store energy for later use, it is so expensive that it doesn't make that much sense from a business perspective. But hey, if we want to get to this green future, we probably can't completely rely on our electric grid for everything. But that's why Plug Power's extended deal with Walmart and their deal with SK Group is so potentially big, because it shows the type of investment that this hydrogen economy idea really needs, because Plug Power has been losing money for a long time too. Their net income situation is actually worse than Bloom Energy's, but people are mainly looking at top line revenue and not net income, treating these companies as growth companies even though they've been around for a long time. So, okay, you could see Plug Power's revenue increasing and saying, oh, that's amazing, but I think it would be very difficult for Plug Power to upsell and try and charge Amazon and Walmart more money because they can just go somewhere else. And Plug has been a partner for Walmart for over 10 years, and they've still never been able to turn a profit. Speaking of profit, let's jump into my quick analysis. Not too much has changed since I've last analyzed these companies, except the market caps have exploded. These companies still have negative earnings. The price to sales ratios have exploded. And I bought a couple shares in Bloom. Even though they have a lot of debt, the key driver for me was the revenue. This company brings more than twice the revenue of Plug Power, and they're trading at a discount in comparison because the price to sales ratio means for every dollar of revenue that they bring in, this is the multiple that you're paying for the market cap. And I actually got in when the price to sales ratio was a little lower because I don't want to pay a huge multiple when there are so many risks. Because for me, this is a long-term portfolio. I don't want to have to sell these stocks because Hindenburg comes out with the report or because these companies can't keep churning out positive news. But these stocks have been on fire. And even news that is generally negative is considered a positive with these companies. Plug Power just announced that they're diluting their shares. They're issuing more shares. That's why I have these plus signs here. They're going to use investors as a piggy bank. And investors don't seem to mind. So, okay. By the way, if you want to share what you know about these companies, drop a comment. I'll try to respond. While you're there, hit that like button and subscribe if you haven't already for the YouTube AI. It really helps the channel grow, which helps me provide better content for you. That's a win-win, and we like that here at the Wealth Investing Network. Anyway, as you can see, all these companies have very negative net income margins, but they all have decent revenue growth forecasts. This is what the analysts think for Bloom Energy. They think the top line revenue is going to increase, which generally makes stocks go up as long as there's a path to profitability, which they're supposed to reach in 2023. Jumping into Plug Power, this revenue growth really is amazing, but they're not going to reach profitability until about 2024. And at that time in 2024, their revenue figure is only going to be about what Bloom Energy has already made in 3 quarters in 2020. But hey, Bloom Energy has a lot of debt. They're not releasing the same amount of good news that Plug Power is, so I get it. That's all the time we have today. Look, I'm long both these stocks. I think there's more potential for Bloom Energy. They have a higher gross margin. Even though they have a lot of debt, they're actually making more money. And Plug Power's revenue is increasing at an impressive rate, but they don't make as much money, or really any money net on every fuel cell that they make. So for Plug Power to be really good in the long term, either these hydrogen costs have to come down somehow, even though they haven't been able to figure that out since the 90s, or I don't really know. Potentially government interest and just the investment that other large companies are going to make towards a greener economy could help. But both of these companies also have to shift away from natural gas and really factor in their emissions. But I want to remind you, I'm not a financial advisor, and this is not financial advice. If you're here to watch my journey, great, because these videos are for entertainment. So in short, I think these are okay companies. Their stocks have room to run, but there are some risks. And as long as the music is going, I guess it's fine. I'm not on social media, but you can always send me an email at TheWealthInvestingNetwork@gmail.com. Thanks for watching. I'm going to go drink 3 bottles of water. See you in the next video.